Millions of people are asking the question, when does this all go away? When does the recession finally come and go? How will I protect myself? I am here to give you those details. I'm going to explain it all. I'm going to take you right around the world, explain each detail so that you know, so that you can be empowered and make the right decisions. I'm going to break that down for you today, right here, beginning with this. $200 billion exits JPMorgan Chase in 1 year as customers withdraw cash amid the US banking concerns. Extreme. I mean, you look at this and you see how much cash was pulled out of JP Morgan of all banks, but of course they saw inflows too. They saw a lot of business, so it's not just one-sided. Let me move through real quick, okay? Texas fund managing $185 billion warns of a recession next year. This is it again, so we can see it from these different angles. Banks can manage outflow risk in the Fed's new payment service system. This is according to the Fed member. This is important. So as we have these crises where we saw hundreds of billions of dollars shifted out in one place or another, now there is a quote unquote solution. Let me get into that in a second, okay? Here we have it, India and UAE, United Arab Emirates, to trade in local currencies and link their payment systems. Linking switches will allow use of the same cards in both nations. This is like massive, because there's growing trade in between. India wants their oil, and I'm sure they're doing business both ways, right? Very important stuff. There are going to be competing systems. You got to understand this. Where are the others talking about this? There are going to be competing systems simultaneously. You're going to have one system that is based on, for instance, the European and US. Then there's going to be a BRICS system. I'm sure they're going to link that together. They all have to agree, and maybe there can be even 20 different systems. But the idea that the SWIFT, the US-based systems are going to control everything, that is no longer the case. And that means that we've got to pay close attention to all of it, because as it unfolds, it's going to create opportunities as investors, but also you're going to be able to, I hate using the word because the Fed does, but pivot at the right moment so that you aren't going to be sideswiped by any of the potential dangers. I'm going to be here to bring you that data. All you got to do is subscribe to the channel so that you know what's going on. You got to stay current. Really important stuff. Okay? You've been seeing this, I know, but US corporate bankruptcies are at the highest level since 2010. It goes on and on and on. Now, we are not in that same world. It's a different scenario, but let's let the facts speak for themselves. It is an absolute fact to see that. All right, rising prices and interest rates are pushing some workers to move around the labor market rather than dig in their heels at their current employers. And we know that there are still millions of empty jobs. So some of these people are saying, I'm just going to keep moving until I find one that I like. And they might have an advantage with that now because businesses are still struggling to get employees to some degree. But there will come a time when that is potentially not a good idea. You don't want to be here for 3 months, there for 2 weeks, there for 6. It does not look good. And a lot of employers, once they can start to get picky, are not going to want those people, because what does it signal? If they don't like something, if they're bothered by the littlest thing, they're just going to leave. So be careful. If you're doing that, there's no harm in moving. Absolutely not. But don't do it too frequently. You want to definitely stay. Anything under a year is like a, sort of a red flag. So be careful with that, all right? Look at this. I'm going to show you some inflationary factors that are just hitting people so hard and what we can do about this. 68% houses cut consumption, 14% stop buying as tomato prices surge over 300%. Okay, this is just one spot. I'm just showing you that, but you could see this as different products are increasing in price. That's all. As food prices rise in June, analysts warn of a tipping point for Americans. Grocery prices were 5.7% higher in June compared to a year ago. Dining out 7.7% more expensive. Okay. So this data just adds on top of everything else. UK food price inflation to be 9% in December. All right. UK supermarket food prices are up by more than 25% in 2 years. It goes on and on and on. Europeans are becoming poorer. Quote, yes, we're all worse off. Now, that is some unfortunate news, one after the other after the other. But don't let it stop you. Do not feel like a victim. This is the circumstance when you print a whole bunch of money and you devalue a currency. But we don't have to stand and take it like this. There are things that we can do. Number one thing, we got to shop for the right prices. You can use apps like Flip, F-L-I-P-P, or Reeby or others that are going to enable you to try to find the right prices. You got to seek out a farmer in your area and do business with them directly. You'd be surprised how they will do business with you, even if it's technically not open to the markets. How do you do that? You got to buy big. That means going with your local community, your family, your friends, and say, hey, do you want to buy this thing? We're going to split it between us. You do the business. You make it happen. A lot of people are not going to do that. You have to be the one. Let's be honest. You have to be the one to make the connections, to make the phone calls, to send the emails. You got to do it because they're not. But you could take advantage of that circumstance as well, okay? Because you're going to get the best cuts of what you need, okay? So make that happen. At the same time, you grow a garden in the backyard. You got to increase your income. There are things that you could do today that make you in a position, put you in a position where you're not just a victim of it. Although, hey, nobody likes higher prices, okay? Unless you're somehow taking advantage of it. But the point is, if we're paying more at the grocery store and things, that sucks. It's not fun. But we got to do what we can, okay? For me personally, the market where I go, I'm making deals consistently. I'm saying, hey, I'm coming in every single few days. I want this and this product. You got to give me that deal. When I go there, it's not a grocery store. I don't shop at the grocery store. I shop at the small place, and I say, look, I'm going to buy 2 of these, and I want $1 off, for instance. And in many cases, they'll do that. They will absolutely do that because they know I'll be back in a few days. And I'm coming again. I'm bringing them repeat business. You can do that with a small business, and you know that you're helping them. You're bringing them in money. Big stuff, okay? How about this? Yellen says that China's slowdown risks spillover, but no U.S. recession. So classic. So classic to see that. But anyway, the point is, the reason I mentioned this is because I talked about it in a recent video. What's happening in China happens with the rest of the world. Janet Yellen, as well as everybody else, are going to tell you, no, that's not an issue. But come on, let's be honest. It is a factor. How much of a factor? Only time will tell. All right. And then this is just more examples of things that are happening. Look, the U.S. is in a circumstance where there's so much money. This is talking about the real estate market. The housing recession is apparently already over. More money is being poured in. People are putting their cash in. But there are 2 things. Number one, a lot of people are talking about the Airbnb crash that is coming. They're not getting enough customers coming in. They finance these properties. They can't pay it off, and they're going to have to sell off. We haven't seen much of that yet. I'm paying attention to it. I'll bring you the details you need to know. Hit that subscribe so I can bring it to you. But at the same time, you look at all of that, and I think, with interest rates being the way they are, it's difficult. It's really putting them all in a very difficult position as a homeowner or as a potential homeowner. People trying to get into the market, really difficult right now. So there's always going to be money to invest. Certainly, where is it coming from, though? That's the question. Okay, Americans are supposedly better off now than they were prior to 2020. 10 to 15% more in their bank accounts than 2019. This is a real skewed statistic when you look at it because credit card usage off the charts, buy now, pay later off the charts. They're dipping into their HELOCs, home equity line of credits. You can see that, and to me, it shows that something's off with that stat, but I want to bring it to you because I want to bring you all sides. So apparently, even though the savings rate is technically actually down to levels we haven't seen in many years, they're telling us that we're better off than in 2019, okay? And then this, just, what I want to cover is all of this as a whole, and I think it's important that we look at the details, we look at the data, and realize that we are in these circumstances now today, not because of, one thing that how the bank crisis, no, It's all because of what happened before. They printed way too much money, kept interest rates way too low, and now we see the effects rising to the surface. So we've got to protect ourselves. I covered multiple ways here today. I hope you do appreciate that. You got to let me know what you think of this stuff. I'm always open ears for your suggestions. You want to see something, definitely let me know and I'll bring you all the details. Hit that like button on the way out because when you do, it helps this channel. I'm bringing you jam-packed information. You just got to listen to me. I know that, I'm trying my best here, trying to bring you the details that you need to know. I'll see you on the next one. Take care.